This is Robert at Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute for Friday, November the 13th, 2020. At the end of another exciting week on the futures markets in Chicago and around Virginia with basis values. This week we really saw, maybe one way of saying it is a lot of conflicting themes. We had the election date behind us. We still know there's some uncertainty around how that's all going to pan out. But we also saw the speculators, commercials, and the farmers greatly anticipating the November crop report on Tuesday. And once they got those numbers, there was a lot of farmers selling, which put some pressure on the markets. We also saw this week the U.S. dollar staying pretty true to where it started the week at, a pretty tight range for the U.S. dollar this week, and we know we saw it fall sharply last week. We woke up on Monday morning, it was about 5:45 when the news came out that Pfizer had a vaccine for the coronavirus that was pretty effective in their opinion, 90%, and they had a lot of doses already made. That got the stock market's flying high. I think at one point the Dow Jones Futures Index was up 1,700 points and touched the 30,000 mark. Those types of macro influences around election results and vaccines and all the COVID cases that we saw this week popping up in Europe and in the U.S. definitely did have some impacts on your futures price along with the November crop report. I would like to highlight this week, we did see the spreads on the futures board for corn widening out some. We saw some carry come back into the corn board. It was neat from one perspective to see that this week. That's an encouragement to those of you who are planning on storing corn in the bin. And at the same time, it's got us asking the question, has the end user bought what they needed here domestically? And maybe that's why some futures are build and carry from one contract, some positive difference from one contract to the next. When you look at that along with a lot of basis values in the Corn Belt falling off sharply this week, you put those two together and it makes you think the end user here domestically, whether it's a feed mill or an ethanol plant, a sugar producer, whatever it might be, that they're getting coverage on that they need. So keep your eye on those spreads in the futures market for corn, and keep your eye on the inversion in the soybean market. It seems like coming through the November crop report, when you look at futures specifically, corn seems to be priced correctly, in my opinion, with where the carryout is now from the USDA. And when you look at the current carryout from USDA on soybean futures, it seems that there's still some upside there. So let's take a look at how the futures did. December corn traded all week, 17 and a half hours a day this week, 5 days, up 4 cents for the week to close at 4.10 in your Dece corn contract. Remember, we have to get out of those December corn futures by the end of this month. So if you've got basis contracts, next week is the last full week before the Thanksgiving holiday week to get those contracts either rolled or priced. January beans, a big week coming off of the stocks report, up 47 cents a bushel for the week to close at 11.48. That's January 21 bean futures, what you're selling your cash beans off of right now. And next year's wheat, July 21, down 3 cents for the week to close at 6.02. I heard several analysts say and teach me this week that it seems wheat has gone back into the follow mode rather than the lead mode, kind of following corn, and we saw some of that this week in each day's action. So there's a lot of numbers in the November 10th report. USDA crop report. Remember, we do not get a December supply and demand report from the USDA, so these type of numbers, this is it until January. And let's take a look at a few things. It really was a big change in the narrative, a shocking change when you look at how USDA reduced yield, showing that the early frost in North Dakota really cut corn yields, and the dry August across much of the Corn Belt did hurt soybean yields. So let's run through the numbers here and see if they can stick in your mind. USDA pegs U.S. bean average yield at 50.7 bushels per acre. That's down a little over a bushel from the October report. That makes a 4.1 billion bushel crop. When we look at corn, they took 2.6 bushels off the yield from the October report. They've got the national corn yield coming in at 175.8. That's a 14.5 billion bushel crop. So fourth largest soybean crop on record. I was gonna look it up, but I didn't. I can't remember. It's a good sized corn crop, but I don't remember where it falls in history. But the big news was the carryout, the leftover bushels. What'll be left over on August 31st, 2021? Beans came in under 200 million bushels at 190. That was a shocker, and at one point beans were up after the report came out 42 cents. Again, that's 190 million bushels expected as the leftover bushels, and we still have 9.5 months to go in this marketing year. That is very bullish to price. When you look at corn, most people in the trade were expecting 2 billion bushels carry out. It came in at 1.7, underneath of the trade expectation, and at one point, D's corn futures were up 17 after the report came out. When we get to wheat, 877 million bushels carry out. That's within expectation, and that's still a pretty healthy carry out there. So let me run through them again. 190 million bushel beans, 1.7 billion corn, and 877 million wheat on your carryout numbers. So stocks to use, that's got corn at 11.5%. We haven't been that low since 2013. And beans all the way down at 4.2% stocks to use. We haven't been there since 2013. So obviously, again, a big change in the narrative, and we're going to look forward to how that price action is going to play off of those numbers next week. We're also going to be watching South American weather extremely closely, more vaccine news, more election news. Give us a call at Virginia Farm Bureau. We'll be glad to help you. Thank you.